everyone, and thank you for taking a moment to watch this video. I'm Brandon Valtenson with Valtenson Bruner Financial Planning, and today I'll be discussing the American Rescue Plan Act of 2021, which was just signed into law on March 11th of 2021. So what you're looking at here is how the $1.9 trillion will be allocated, but I will be specifically focusing on certain provisions that may be more relevant to you. So I'll start with the stimulus checks of $1,400, which have already begun to post to some people's accounts. Now there are some changes in terms of eligibility for this round of stimulus checks. So I'll explain what those changes are so that you can determine your eligibility along with the amount you can expect to receive. Next, I'll discuss the extension of unemployment benefits along with how unemployment compensation will be taxed. I'll then discuss expanded tax credits, specifically changes to the child tax credit, dependent eligibility, along with the child and dependent care tax credit. And lastly, I'll discuss the benefits to small businesses included in this bill and briefly touch on an additional provision of healthcare coverage for terminated employees. So the third stimulus checks will be treated similarly in that this is an advancement of a 2021 tax credit. The amounts are $1,400 per individual or $2,800 for couples filing joint. There is an additional payment of $1,400 per dependent. So the main changes on this round of stimulus compared to last is there's changes to the income limitations and phase outs along with dependent eligibility. So the eligibility in terms of income limits is following the same as the last two rounds of stimulus check, and that it is based on your adjusted gross income. Now you can find your adjusted gross income on your 2019 tax return by looking at Form 1040, line 8B, or you can find it on your 2020 tax return, Form 1040, line 11. So one change here is that the phase out is much more restrictive in this line of stimulus checks. As opposed to single filers with phase outs ending at $99,000, it has been reduced to being completely phased out at $80,000 as your adjusted gross income. For joint filers, where it was $198,000 adjusted gross income where phase out would end, it is now $160,000. So if your adjusted gross income exceeds the phase out ending point of either of these, depending on your filing status, you will not be eligible for this round of stimulus checks. Another change worth mentioning is the expansion of eligible dependents. So in the prior stimulus payments, dependents were only eligible if under the age of 17. This bill, however, includes all dependents in the household, including children later years in high school or in college still claimed as dependents. And it also includes parents who may be claimed as dependents. So I just gave an example here that I'll just walk through. So Joe and Jane filed jointly. They have a 20-year-old son in college and a 15-year-old daughter in high school, both of which are claimed as dependents. Their adjusted gross income is $125,000. So their income is under that threshold, so they are eligible for the third round of stimulus payments. Now, in prior payments, the son who is in college would not have been an eligible dependent and therefore not eligible to receive a stimulus check. However, with the changes in the dependent eligibility, they would now receive a stimulus check for all members of the household. And with 4 of them, that would equal $5,600. Included on this page here, I have a website that you can use to determine what your eligibility and amount would be. You would just need to provide an input into the website, your filing status, the number of dependents, and your adjusted gross income. You can also track your payment through the IRS website by visiting the website shown. You'll just need to enter your social security number, date of birth, street address, and zip code. And the IRS will let you know when they have you scheduled for them to directly deposit the stimulus check into your account if you're eligible. There were instances in the last rounds where that did not occur, and what you can do is enter the additional information requested in order to receive the payment in advance. But don't worry, if you do not receive the payment, there is a recourse. When you file your 2021 taxes, and based on your 2021 adjusted gross income, you're below those thresholds, so you're eligible, you will receive your tax credit when you file your 2021 taxes. Next, I'm going to switch over to the enhancements of certain I'm going to switch over to the enhancements to unemployment compensation. So included in this bill is aid to states so that they can continue unemployment claims and paying those through September 6th of 2020-21. This bill also includes the continuation of the federal pandemic unemployment assistance of $300 per week to also continue until September 6th of 2021, excuse me. This bill includes a change to taxation of unemployment compensation. They have indicated that the first $10,200 is received tax-free as long as you are below $150,000 of adjusted gross income, including your unemployment compensation that you receive. Now, this isn't a phase out like the other two, like the stimulus check just mentioned. This is a full cliff style. So if your income exceeds the $150,000, regardless of filing status, you are not eligible to have any of your your unemployment compensation received tax-free. Now, one thing to note here is that if you're married filing joint and both you and your spouse has received unemployment compensation, you are both eligible to have up to $10,200 received tax-free for a total of $20,400. Some of you who have received unemployment compensation may have already filed your 2020 taxes so that the unemployment compensation may not have been taxed correctly if you were under that $150,000 income threshold. Now, the IRS did provide some guidance, and what they are currently asking is that no one file an amendment at this time. They will provide additional guidance in the future in terms of how they're going to correct the unemployment taxation based on those who have already filed their 2020 taxes. They are also currently working with current tax software providers so that the software providers can update their systems to make sure that those who have yet to file will have their unemployment compensation taxed correctly. So the next thing I'll be discussing here is an enhancement to the tax credits, and this one in particular is the child tax credit. So the child tax credit currently is $2,000, and what this bill does is it actually increases it to $3,000, and even further if your child is under the age of 6 to $3,600. Now, there is income thresholds for this, and they follow the same as the income thresholds for the stimulus checks. So if your adjusted gross income exceeds $75,000 filing single or $150,000 filing jointly, that additional enhanced tax credit will begin to be reduced. Now, the $2,000 tax credit will maintain the original income thresholds of $200,000 for single filers and $400,000 for married filing joint filers. Now, this bill also does increase the age to 18 from age 17. So if you have a child turning 18 this year, they are listed as a dependent on your tax return, you will be eligible for the enhanced child tax credit, provided you fall under the income thresholds. Now, one other provision of this here is 50% of the estimated child tax credit for 2021 will be paid in advance in equal payments from July of this year to December 31st of this year. So if you have a single child under the age of 6 with an estimated child tax credit of $3,600, 50% of that will be paid in advance, or $1,800 of that will be paid in advance. And over 6 equal payments, that will be $300 per month that will be automatically deposited into your account. The IRS is still working on how exactly they're going to implement that, but they have been given guidance to make sure that that is implemented. Another enhanced credit that I'll be discussing is changes to the Child and Dependent Care Tax Credit for 2021. Now, this is going to have great benefit for some. However, if you are a high income earner earning in excess of $440,000 for adjusted gross income, where previously you may have received a small credit, you will be receiving no credit in 2021. Some of the changes that they have made here is that they're increasing the amount of eligible expenses. If you have one child, it's being increased to $8,000 from $3,000. and it is also being increased from to $16,000 from $6,000 if you have 2 or more qualifying children. Now, the percentage in which that can be eligible for the tax credit is also being increased from 35% up to 50%. And the income phase out is also being increased from $15,000 up to $125,000. Historically, many people with the child independent care tax credit, the phase out starting at $15,000 was very abrupt, so most people would be immediately reduced down to the 20% of eligible expenses. So this expansion and increasing the income phase out limits up to $125,000 should have a great impact for those with children who have qualifying dependent care expenses. So I just want to give an example of what this is. So we have Joe and Jan here. They filed jointly. They have 2 qualifying children under the age of 13. Their eligible expenses are $20,000 and their adjusted gross income is $120,000. So the max eligible expenses is $16,000 because they have 2 or more qualifying children, and the applicable percentage is 50%, which is the maximum. So their credit is $16,000 times 50% equals $8,000. Previously, this was a non-refundable credit, but for 2021, this will be changed. So this particular family would actually see a refundable tax credit of $8,000. Certain small business benefits is really an expansion of what was previously done. So they're adding another $7.25 billion into the Paycheck Protection Program, including expanding eligibility to additional nonprofits and digital news services. There's also different programs that were set up in response to the pandemic where they're providing additional funding for those. Lastly, I'm just going to briefly touch on this. There is an additional provision for those that are terminated. Now, if you're terminated from employment, a lot of times you have the option to go on COBRA, which is staying on the group health plan of your employer. Historically, you would at times have to pay up to 102% of what the cost plan is. So what this bill allows is actually a subsidy for that, where between April and September in 2021, if you're terminated and you're on COBRA, you actually pay $0. The business actually pays the premium on your behalf, and then the business will receive a tax credit to recoup those expenses that they incurred. So I just want to thank you for listening today. As always, please contact us if you have any questions or if there's anything you would like to discuss. You can also forward this video to anyone you feel would find this information helpful. But I just want to thank you, and I hope you have a wonderful day.